Yo, what's up guys? It's your boy Looney. Today I'm breaking down two investing strategies that feel like they shouldn't be allowed, but they're 100% real, legal, used by myself and used by pros every single day to generate consistent gains even when the market is choppy. And with today, we're seeing Bitcoin pushing toward all-time highs and the market is showing strong bullish momentum. These strategies hit extra hard right now. But before we get into it, I want to do a quick shout out to the Discord. It is free to join and there's a premium tier with trade alerts, one-on-one coaching, and my full options selling course. Links to that are in the description. So the first strategy we're going to go over is cash secured puts. This one gets slept on, but it's one of the safest ways to get paid to buy stocks you already want to own. I'm going to go over how it works. So first off is you sell a put on a stock that you like. Now I've been doing it on Mara or SoFi and Riot for months now. Now we are seeing the stocks finally have that appreciation and are gaining value very drastic, and I'm seeing those gains. But I acquired those shares doing this strategy. So I'm going to do one on Oscar because this one is still a opportunity for myself, and I do have one of these trades open. So you choose a strike that is below the current price of the stock. It is called out of the money. So if I go to this 1 month expiration, that's what these dates are at the top. I have it on sell put, and you want to choose a strike price that is below the current price. And that means it's out of the money and you want it to be out of the money. And I have one on $15 put. I did this about a week ago and the strategy still works right now. You can maybe do a little bit lower of a strike price, but you're choosing a price where you actually want to buy the stock. Now I'm okay with owning Oscar at $15. And if it does drop below $15, I get assigned. And I'm okay with owning these shares at that price. If we go to Oscar, just looking at this 1 month chart, it jumped up to $22 and has quickly fallen back down. And we could see that good support line for right around that $15. If it goes below $15, that's fine. Once again, I'm okay with owning it at that $15 mark. But let's put that trade back up. So we have that sell put again. And to do this sort of trade, you get paid up front. And that's what these numbers on the side are. They're called premiums. And you just get paid for just agreeing to buy the stock if it drops. So you have to lock up that cash collateral. It sits in this trade. And as time goes on, you have a realized gain or your option appreciates or depreciates in this example. And if it goes to zero, which you want it to be worthless, then you have that realized profit of that premium. So you're basically just getting paid to just have this contract for a set period of time. And that's what I have going on with this $15 put. But if I were to open one, let's say I would do that $14 put. It's a lower delta and it's a little bit safer. So you'd get paid $44 upfront to just have your cash being in this contract and basically agreeing that you're okay with owning Oscar at $14. If it drops, that's fine. But if it doesn't drop, you get to keep the cash. And again, if it does drop, you buy the stock at what is a discount and you get to keep that premium that you got. So that $40 right here in this trade, it goes to your buying power. You can't necessarily lose that premium. It's paid up front. And I just closed a few puts earlier today after a quick run up because of the market was running up very abruptly. I closed it on a leverage one on Tesla and also one on Mara. Mara jumped up pretty significant this past week. I did it when it was at this $15 or $16 mark. And if we scroll down to here, we could see that I closed it. And to close, you just basically buy to close. And I realized a gain of 42% or $24 in about 2 days. So I will close early sometimes if there is an opportunity. And having that 40% gain in just 2 days, I couldn't just let that go. So I took advantage of that that value. But if we go back to here, I have this one open and I'm agreeing that if Oscar goes to 15 or lower, I get to own the shares at a discount. And you might be thinking, why not just wait for Oscar to dip to $15 and then buy shares? Well, one is you can't really predict the future. And if you could, you would just buy puts. But realistically, this is a more safer strategy because you're basically saying that if it does drop, you're okay with owning it. And not only are you okay with owning it, you got paid a little bit. So my break even is 14.15. So really, I'll lose money if the stock drops pretty significant. If it goes to $11 and $12, where it's below that break even. This break even takes into account of that premium. So I got $85 when I first opened this. So that's why that break even is really just $15 minus the premium, and that's how you get that break even price. And also with this strategy, you could dollar cost average if you have the capital. So if Oscar goes to 15, I'll open up another sell put at like 13 or 14, and this way I can get my average cost down. Now, strategy 2 is buying long-term leap calls. Now, it's good to do this when the stock is cheap, but you really can do this kind of whenever, because the way the options work is they take into account where the stock is trading, and usually the price of buying these options depends on where the stock is. So if there's a lot of volatility, premiums are more expensive, and this is a buying strategy. So you're paying to do this. So the premiums are a little bit more expensive, but right now the premiums are a little bit cheaper. But again, they're going to be at higher strike prices, which they kind of cancel each other out. So I like to buy these when there's fear in the market or very little support. So if there is a massive crash in this stock and then I do see some little support, then I'll look to buy a leap call because I'll see that the momentum has shifted. But this is a very bullish strategy. And this riot call was done when the stock was trading very low and there was a lot of fear in the market. So we can look here. It was on the 6th of May. So let's go back to the 6th of May and see where it was there. So on the 6th of May, it was trading at almost $8, which is really cheap. Now, it did go lower. I didn't time it perfect. But again, I wanted to do it when there's a little bit of support and the momentum changed. So I waited a little bit. And that's when I decided to open this trade. And we could see up here or down here, I'm up 100% or $400. And I only put up $400 to make this trade. So let's get into how this works. So instead of buying a ton of shares of a stock, you can buy a leap. And it is a long-term call option that basically lets you control 100 shares for a fraction of the price. I only paid $400 to open this option, when if you wanted to buy shares, it would have been a lot more expensive. And this acts as if you own 100 shares. So you can see this, I'm using this on stocks like Riot, and I also have one on SoFi. This is another good example when I didn't time this one good, but is still doing good after this massive upward direction. I'm up 64% or 490, and I didn't time this one that great. But Leap does give you leverage without having to use margin. But I do use this strategy when I'm very bullish for the next year. So you want to do this on a long term. So this one goes about a year out. And I don't want to overcommit cash. I don't want to put too much cash into Riot, where instead I could just do a buy leap call option, which doesn't require as much capital. And your max loss on this trade is the premium you paid. So if Riot doesn't move or it drops or it doesn't go above the break even, which the break even is the strike price you chose plus the premium you paid. So mine is like $9. It should be. Yeah, my break even is $9. But if this doesn't go above $9 by expiration, which is in a year, then the most I can lose is that premium I paid, which is, I wouldn't say not possible, but pretty unlikely. We could see here, for me to lose it, I will need the stock to be at essentially $5. If we go down to here, right around $5, is where I'll lose that premium. So as long as it's above $5, my loss won't be that max loss. And better yet, as long as it's above $9, I will have made a net gain. And the way buying options work is they lose value over time. So that's why this is going down as we get closer. I'm not looking to sell these just yet. I will probably look to do it when we get to that 45 days to expiration, because that's when things start to pick up pretty exponential and pretty rapid. I might even do a little bit earlier, depending on where things go. But you could see how much money you can make with just a little bit of capital. But you do have to make sure you believe in the stock long term. Don't treat this like a lotto ticket. You have to have what people like to call as conviction. I believe in Riot. I own Riot. I own 800 shares of Riot. I'm running covered calls, which are not doing great, but I also have this buy call option, and this one is doing really good. Again, I'm up almost 100% on just that one option. So while I've been doing these two strategies in the stock market, crypto, if we switch over to this topic, is it's been heating up right now. We're seeing Bitcoin approaching all-time highs. It's at 113,000. And I wanted to bring this up because Riot is also a crypto mining company. So with Bitcoin rising, Riot is doing well because it is mining Bitcoin. But we're seeing these new all-time highs. We're seeing Ethereum, altcoins, starting to see some life. Dogecoin, which I was read about a week ago, I'm now in the green. And that's the way crypto is. It is very volatile. One day it's down, the next day it's up. And it's kind of that violent movement. And it's not for the emotional trader. If you're an emotional trader, crypto is very difficult because of how much it truly does move up and down. And actually, to keep in control of this momentum, I've been just DCAing. So I put $3 a day into Bitcoin, Ethereum, Doge, and just having that for a long-term position. And I do have this cash available. So if we do see more volatility, I might double down on those strategies that I just mentioned before with buying leap options or selling puts. And I'm just letting my systems do the work over time. So those are the two strategies that feel too good to be real, but they're not hacks. They're legit tools if you know how to use them. Drop a like if you're staying patient and getting paid. And join the Discord if you want to see these plays in real time. Catch you in the next one. Peace.